All right, welcome back to Lunch of the Market. What an exciting night last night as the Florida State Seminoles took down the number one team in the land, the Duke Blue Devils. Of the 7 times the Duke Blue Devils have lost to an unranked opponent, 3 of them have been by Florida State. And Florida State also accounts for 5 of the Devils' last 10 losses. Not too shabby. I'd say that the physical style of basketball that we play down there in the state of Florida is a little too much for the Devils on many occasions. So you get to see my obnoxious shirt that my mom actually made for me, I think back in high school. Anytime Florida State has a big win or a big game, that's right, we always pull it out and put it on. And the Cincinnati Bearcats, not too shabby either. They are at 16-1. They just took down South Florida, and they have another big. In fact, the next 4 games that the Cincinnati Bearcats have are all against top 25 ranked opponents. So good luck to you guys. We'll actually find out if the Cincinnati Bearcats are actually made of anything this year or if it was just a fluke that they won the first 15 in a row. All right, today's trading. Semi-LEDs Corporation, symbol LEDS, reported weakness in the general lighting market on their conference call. Well, that just sent the entire sector reeling in a tailspin. Vico and CREE are getting absolutely whacked today. CREE is down over 4.5%, and Vico is down 3.5%. They're getting obliterated. Well, later in the conference call, the company's CEO, Theodore O'Neill, said that the weakness was actually specifically in cell phone LED camera flash, right? So the little tiny LED in your camera phone. He's saying that the weakness in the market is specifically related to that. Well, that is actually a niche market and really wouldn't apply generally to LED backlighting and outdoor lighting and light bulbs and all the other segments. So the good news is we only have to wait until Tuesday when CREE, symbol CREE, right? Isn't that nice of them to make the ticker symbol the same name as the company? They report on Tuesday. We'll try to cover that for you live from the StockTwits desktop application. So all you have to do is log into your Twitter stream and you'll see constant updates as they come from the conference call. As long as, I haven't looked at the timing of the call, as long as we don't have something else at the same time, we'll be covering that conference call live. No matter what, we will be listening to the conference call either after the fact or live, and we'll get you any pertinent information. That will move the stock. If not, only just to make up what the stock has lost or is losing right now this second. We're going to see the stock move on that. So what did we do? We did 2 things. One, we got a little bold and we sold some more January 65-60 put spreads in January. Okay, got quite a pretty penny for those. And of course, on days like today when the stock is down real big, we sell the put spreads. You know how it works. Okay, if we have to, we'll roll those out. We also went ahead and added on the suggestion of at NC Lobo 62.5, 57 put spreads. Okay, so we are short both put spreads. If the 65-60s don't go our way, we should be just fine with the 62.5, 57.5s, and then we'll just simply roll the 65-60s down and out to the next month, and then we'll try again in February. Okay. Now the other thing that we did, we like to call a double bullish bet. What does that mean? It means a totally different trade structure, but it's leaning in the same direction. So obviously, we think that the selling is overdone. We're looking for a bounce. We sold the put spreads. That's one trade. Okay, the double bullish bet comes in. We got long the completely in the money 57.5, 62.5 call spread. How does that work? We're long the 57.5 call, and we're short the 62.5 against it. As long as the stock stays above 62.5 where we're short, then this spread will be completely in the money, which means that it's just a simple math problem. 62.5 minus 57.5 equals $5. Okay, so we put on this $5 spread for $4 today. Okay, then we just simply wait till next Friday. As long as the stock is above the 62.5 where we're short, the spread's going to be worth $5, and we make 25% rate of return in 9 days. Not too shabby. Okay. We did the same thing in February, only in February we paid only $3 and about 75 cents for the trade. So we have $1.25 of upside instead of $1 of upside. Okay, same strikes for February as well. Now, why does this work as a trade? Well, there's 2 things that go into the price of an options. One is time value, the other is intrinsic value. Well, on the January 57.5, 62.5 call spread, the time value is only about 9 days left. So as soon as that 9 days disappears, so will the time value. Then you're just left with a simple math problem. 62.5 minus 57.5 equals $5. That's what your spread's going to be worth. Now, what allows you to do this? Volatility. Volatility is just the up and down motion of price action on a chart, right? That causes options prices to be temporarily mispriced. Okay. For more information on what volatility is, what exactly it is, how it's calculated, search the terms MO Financial and volatility in the YouTube search bar, and you'll find the video that we did entitled Understanding Volatility. Look out for the blender in that one. All right. So for more volatility, check out that video. We're along the in the money January and February 57.5, 62.5 puts call spreads, completely in the money. Okay, then just wait for time value to get sucked out. Do the math. Spread's worth $5, and we get a nice rate of return, both in 9 days, and then again in a slightly nicer return over a slightly longer period of time in February. All right. Hope that clears up some questions. Thank you at NC Lobo for your questions on Twitter. Volatility on days like today obviously create opportunity, and today we like to trade the market that's in front of us instead of the one that we'd like to have. So we wait for moves to happen like today in CREE, and then we take advantage of them. Remember, earnings are next Tuesday. A lot of things are going to be settled from then. Thanks so much for tuning in again today, and thanks everyone for reading the latest blog post. We really appreciate that. There have been hundreds of people log in to read the latest blog post, which is in response to James Altucher's latest blog post. Don't forget to leave a comment. We really appreciate everybody tuning in, but we'd really love some comments if you have a reaction to it. You can do it on our YouTube channel, and you can do it on the blog. Thanks for tuning in again today. Have a great day, and we'll see you tomorrow.